Hi everyone, welcome to the channel. Today our focus is on the company Nvidia, ticker NVDA, the tech company known for high performance GPUs. Now, based on their 2023 fiscal year results, I'm updating my valuation and the company's growth rate, which I previously was using a 20% rate. But from their recent earnings call, that was an underestimate, and we should be seeing an even higher growth for the company into the next decade, driven by their data center systems that are used in AI, supercomputing, and will be the catalyst for the next evolution in the tech industry. Now, currently, Nvidia is the third largest market cap at about $2 trillion, but I can see them potentially being number one, even if it's for a short period of time in the future. And I would recommend that everyone listen to their recent fiscal year 2023 Q4 earnings results to gain a better understanding of the company and the potential growth. Now, in this video, we'll look at NVIDIA's financials and perform a stock valuation. But since this is a company I recently purchased into, we'll look at my purchases and my portfolio performance overall. So let's jump right into it. Here's my investment in Nvidia. You can see I just made it in March at a price just under $840. Now, this is higher than my valuation. I would like to buy in at under $800, but I doubt I'm going to be seeing that price at least anytime soon. So I figured I might as well get in now before the price goes up. And since buying in, I'm up 1.5%, while if I bought into the S&P 500, I'd be slightly down. And down below is the overall summary. So you can see I put in just under $8,400, and with that 1.5% gain, I'm up just over $8,500. Now we're going to move on. We're going to look at the portfolio's performance overall. Here's the portfolio's performance overall, and we can see in the video there in the lower right, it is a smaller investment compared to many of the other ones, but we'll see how it grows over time with stock appreciation and any additional investments I make into the company. A few other ones I'll point out, Google, you can see it's down since I bought into it a few weeks ago. They've had some negative publicity with their Gemini platform, so hopefully they get things straightened out and back on the right track with that. Tesla, also a newer investment. We can see that's slightly down. And then Tyson Foods, TSN. I've owned this probably for at least 2 years now, and it's been an underperformer. And I'm just now thinking about when I should sell out and move those investments into a different asset. And same thing with T. Rowe Price, TROW. I owned that for a couple of years, and again, an underperformer, and looking to move on from that. But just haven't sold out of either one of those just yet. And the last one I'll point out is BTCW. That's one of these new Bitcoin spot ETFs. So I do own some Bitcoin, but I decided to buy into one of the ETFs, and we can see it's slightly up since buying into it relatively recently as well. But let's move on, and we'll look at NVIDIA's financials next. Looking at NVIDIA's financials, we can see the summary at the top with the check marks, meaning there's no issues, and the metrics we're going to look at are heading in the right direction. So if you're not interested in going through these data points, you can move on to the next segment. But I'm going to take a few minutes and walk through these, starting with dividends. And though NVIDIA was increasing their dividend from 2015 to 2019, but since then it's remained flat at 16 cents a share. And for a stock trading at $800 per share, it's almost as if they don't pay a dividend. We're looking at a dividend yield of a fraction of a percent. But I'm still giving this a check mark because rather than increasing their dividend, they're buying back shares, which we're jumping to next. And for the shares, we can see in 2016 to 2017, they did have a big jump, just over 14%. But since then, the shares are down 4%. And for the past year, they spent $9.5 billion on share repurchases. But since this stock does trade at a high premium, we don't get to see that significant reduction in share count due to a high PE ratio. But they are spending a lot on share buybacks and plan to do so moving into the future. So that's why they're getting the check mark. And then for revenue and revenue per share, both of these with significant growth over the past 10 years, with revenue increasing more than 1,200%. And for their January 2024 results, that did have a big jump, 125%. But even if we don't take that into account and look at the growth from 2015 to 2023, it's still up 475%. While on that per share basis, the overall growth is just below 1,100%. And not taking into account January 2024 results, it's still up more than 400%. Now let's jump down and look at a few other data points. The net income and earnings per share for the last year, these are both up nearly 600%. Pretty incredible. But for the last 10 years, net income has increased over 4,600%, with earnings per share just under 4,200%. And even if we don't take into account the 2024 results, revenue is still up almost 600%, and earnings per share more than 500%. Then moving on to free cash flow and on a per share basis, we have a similar results here with the 1 year growth for each increasing more than 600%. And for the past 10 years, free cash flow up more than 3,200%. And on that per share basis, more than 2,900%. So these are pretty incredible results right here for these four metrics. The book value per share also having significant growth, though not as high as the data points we just looked at, but still for the past 10 years, it's grown 775%. And then moving on to return on invested capital and net profit margin. I like seeing both of these 10% or higher. And we can see return on invested capital, they achieved this over the past decade. And since 2017, it's been over 20%. And for the last year, it was over 60%. And this is a very important metrics for an investor, and this is what we want to see. Though these are pretty high, that's why you're going to have to pay a premium to buy into the stock. And same thing for net profit margin. We can see they're well over 10%, and for many years they're over 20 and in the 30% range. And for the last year, just under 50%. Now, moving on to long-term debt to free cash flow, I like seeing this under 3, and Nvidia has been under this for the past 10 years, and currently at 0.31, they could pay off that debt if they wanted to. So overall, significant growth, and these numbers will continue to grow into the future. But before we move on to the valuation, I'm just going to jump over to their investors presentation from January 2024, just to take a quick look at one of the slides. This is slide 26 in NVIDIA's recent earnings presentation showing the growth for their four key segments. And the one on the left is the most important for data center, making up nearly 80% of the total revenue for their 2024 results. And if you're bullish on the company, this is where the growth will mostly be made moving forward. And over the last 5 years, it's CAGRed at a rate of about 75%. Now, I'm not sure if they're going to maintain this higher level, but I am optimistic that it is going to be very significant growth moving forward. And we're going to see part of that reasoning on the next slide. Slide 27 here highlights their data center products, which are used to power AI like ChatGPT, Copilot, and similar services, with the expectation that over time companies will be using, or all companies will be using some sort of AI-powered tools to help run their business. And this AI is only in the beginning innings, with the most popular tool being probably ChatGPT, as we mentioned, and that was only released about a year ago. So there's still a lot of growth for AI, probably growth into the next 5 to 10 years, not only for AI, but other advanced computing technologies, which all these will need NVIDIA's latest products in the hands of their customers to achieve this. And already, demand is outweighing their supply. So there is significant growth to be seen for NVIDIA. And like I said, I'm optimistic that going forward, we're going to see a high growth rate for the company. But let's move on now and we'll look at their stock valuation. Here's the initial valuation setup for NVIDIA, and we are going to make a modification to this in a moment, but we can see the initial setup is showing a value of $590, but we're going to jump up to the top and make a quick change. And it's going to be here the free cash flow. From 2015 to 2017, free cash flow was 805 million to 1.5 billion. But we can see since then, it's basically been over 3 billion, or at minimum 3 billion. Yes, 2018 was 2.9. I'm just rounding that up to 3 billion. And for all the other years, we could see it was above that 3 billion mark, as I've been indicating. So for these initial values from 2015 to 2017, we're going to remove those because this is dragging down our valuation that we just seen a minute ago. Now with those removed, let's jump back down and see the updated valuation. With those free cash flow values removed, intrinsic value jumps up to $792, and with a 90% margin of safety, brings it down to $713. Now, this is based on a 40% short-term growth rate over the next 10 years with a 10% discount rate, and I am using a 3% long-term growth rate. Now, up in the top right here, we can see the net income CAGR over the last 10 years was 53.45%, while earnings per share grew at a rate of just under 52%. So, with these being in that low 50% range, I feel my short term growth rate of 40% is being a little more conservative. And also, that 3% long term growth rate, I feel, is being conservative. I could have jumped that up to maybe 4%, but using 3% just to try to be a little conservative, especially since I removed those free cash flows, which would have dragged down that valuation. Now the stock is trading around $850 to $860, and as I mentioned earlier, I bought in at $840. So the reason why I bought in at 840 is because I feel Nvidia is a quality company, an industry leader, and sometimes you have to pay up for quality, and this is one of the situations. And to be honest, I don't know if I'll see the stock price fall below 800 or get into the $700 range. So, though it is a little higher than my valuation, I still think 840, even maybe 850 is still a fair value to buy into it, though it doesn't give up much or any margin of safety. But I'm holding it for the long term, like 3, 5 years or longer, and I feel I'll make a good return even buying in at a slightly higher price. And I am looking to buy more shares moving forward. So we'll just see how the price fluctuates over the coming weeks, and maybe I'll buy in a few more times. And let's just see how the valuation changes. If I do increase my short term growth rate, we'll just move that up by 1 percentage point to 41% and see how that impacts the intrinsic value here. So with the 41% short-term growth rate, see the intrinsic value jumps up to $852. So basically right where it's trading in that 850 to 860 range. And so 41%, 40%, it's not much difference. So that's why buying in at $840, I had no problem with, because it's, again, not significantly higher than what I'm valuing the company at the moment. To recap, my outlook for NVIDIA is quite positive, as I believe AI and supercomputing are still in their early phases, and there will be significant growth going forward. For companies to participate in this movement, they're going to need to upgrade their equipment to participate, and NVIDIA will be a key beneficiary. Now, this is not just impacting the tech industry, but all segments of the market, like auto, banking, industrials, healthcare, to name a few. And though my valuation is between $713 and $792, I did not mind paying a little higher for my shares, as Nvidia is an industry leader, a quality company, and I know sometimes we need to pay up for a premium business like this. Now, I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.